On Saturday, Embraer said it will pursue all remedies against Boeing for the damages incurred, calling Boeing's move to terminate the deal a wrongful termination. In its press release, the Brazilian company made reference to the Boeing 737 MAX 2 fatal crashes that have cost the aircraft maker at least $18.7 billion. Embraer said the company was manufacturing false claims to avoid paying $4.2 billion because of its own financial condition and 737 MAX and other business and reputational problems. Under the terms of the deal, Boeing will own 80% of Embraer's commercial aircraft operations, while Embraer retained 20% ownership. It would have helped Embraer, a leader maker of small passenger jets, compete with Canadian rival Bombardier, which joined Airbus in a similar partnership announced in 2017. Meanwhile, G20 nations have pledged to cushion the economic blow of the coronavirus pandemic on global tourism, one of the hardest hit industries in which millions risk losing their jobs. COVID-19 lockdowns have pounded international tourism, which is estimated to see a 45% decline this year, according to the Organization for Economic Cooperation and Development. G20 tourism minister pledged to ensure coordination as their countries ease lockdowns and travel restrictions to support the struggling industry recovery. Up to 75 million jobs are at risk in the labor-intensive sector. And global central banks remain under pressure to do more to support their economies through the coronavirus recession, even after driving interest rates to record lows and pledging to spend trillions of dollars on asset purchases. The U.S. Federal Reserve, Bank of Japan and European Central Bank, which together cover almost half of global output, will convene meetings of policymakers this week after the pandemic-driven freezing of economies and turmoil in financial markets propel them into action. With governments this week set to confirm multi-year expansions ended in the US and the euro area in the first quarter, monetary policy makers may have to do more to limit the recession and speed the recovery. Among the options on the table include extending the quantitative easing, helping ease credit to troubled businesses, and committing to rock bottom rates for longer.